Welcome back. We are now going to delve into the second part of the second chapter. In the first part of this chapter, we talked about essentially what a CAFR is versus what a minimum financial GAAP basis financial report is. We also talked about the reporting entity. We covered a bit about what the basic the governmental primary government is and what the component units are. Now we're going to dive into the financial statements themselves. This is expected to be an overview again. There's a lot of material contained in this part, but there will be more throughout this course to give you the deep dive. So for now, it's just a matter of familiarity. So, but there will most likely be questions about the general nature of governmental financial reporting on the CPA exam. So focus in and we'll give you the familiarity that you need. Okay, the primary thing that we're doing in this part is illustrating and understanding the basic financial statements for a state or local government. And this is a general understanding of governmental financial reporting. The foundation for all of this material is GASB statement number 34. I will tell you right now that we on the GASB are now looking at doing certain refinements to the financial reporting model. So as you move into this field, if you come in to become a governmental accountant, some of the rules will change a little bit, probably about 3-4 years from now. But for now, if you're taking the CPA exam, this is what you're going to need to know. Now, bit of a review from the first session that we had. Government-wide level. This is the level that is going to look at least a bit to you in concept like a private sector business. There are two financial statements that are prepared at this level. They're holistic in their nature. That is, they try to take all of the funds and put them on the same measurement focus and basis of accounting. Notice there's only two funds at this level, a statement of net position and a statement of activities. There's no statement of cash flow. The statement of net position is like a balance sheet. The equation is a little bit different. Instead of assets equal liabilities plus equity, the format is such that it's assets minus liabilities equals net position. But what we're using here is the economic resources measurement focus in the accrual basis of accounting. So when we say economic resources, it's got some differences from fund basis accounting, but what it does is it includes the capital assets and long-term debt. Now, the statement of activities is very similar to an business income statement. It's formatted a little differently, but it's based upon the same principles. At this level, there are no fiduciary funds. No fiduciary funds. Okay, some words about the government-wide statement of net position. The assets in this report are listed in order of liquidity. What you're used to seeing on the business side of classifying assets into current and non-current is not required at the government-wide level with the statement of position. Net position, that is the residual equity, has three components of it. We'll dive into this in more detail in the future, but the three components are net investment in capital assets, so it's related to the asset side. Restricted, generally speaking, there's some form of legal restriction on the expenditure of the assets, or unrestricted, that is largely free and clear. A few more points about this statement. It's divided. We'll see this in a minute. It's divided between government activities and business type activities. The governmental activities are those things that are more related to the core delivery of services, and you'll see a lot of what we call non-exchange transactions in governmental activities typically. And then you have business activities, which really are at their core are the proprietary funds less the internal service funds. So it's those enterprise funds rolling up And there's really not much conversion that's necessary to roll up those proprietary funds into business type activities. Now the component units, we have additional columns in this report, and that can make, if you have those discretely presented component units, that can make these government-wide statements of net position look rather busy. So what may alternatively be done is present prepare a combining statement to roll up those component units. That's an alternative presentation, but they can be shown, each individual component unit in a separate column at the government-wide level. Usually this is not too much of a problem for a lot of local governments because they don't have that many component units, but you can have a situation where there are a lot, and so there's government might look for a more efficient way of presentation. This in 2 slides, this is page 27 in Copley. 2 slides shows you the statement of net position. So this is the top part of the statement showing the assets. You see here that they are not classified, but they're listed in order of liquidity with cash and cash equivalents at the top and capital assets that have accumulated depreciation at the bottom. And you have these 2 columns, governmental activities, business type activities added together, giving you the primary government, and here's a discretely presented component unit off to the right. Here is the bottom half of the report, liabilities, and then assets minus liabilities gives you net position, and here are those 3 components that I talked about in a prior slide. Now, the statement of the government-wide statement of activities, this is the income statement, if you will, of the entire government. And it is prepared on a net cost of activities format. So essentially what you have for each type of function, you have the expenses listed minus certain things called program revenues, and then you have a result of that, and then general revenues added to give you a net position. So it's a little bit unusual sort of presentation if you're used to looking at business type statements. And then there is a reconciliation to for both this statement and the statement of net position to tie out to the governmental activities or the governmental funds that we'll talk about later. Now, this is what the statement of activities looks like, and this is page number 31 in Copley. So again, you start with the expenses, and then you have program revenues, and we'll get more into this later in the course, that are added. That gives you a net expense or revenue right here for governmental activities. And then we have a separate presentation for governmental activities and business type activities. Now look at all these negative numbers for governmental activities here. The net expense, that's an expense number. If you go to business type activities, you typically see this. That is where you have more program revenues. That is, they relate directly to the function that is involved here. And you have, in this case, you've got some positive numbers for certain functions. But down below, so you read the statement from left to right and then down. So here are those general revenues that you add back in, primarily under governmental activities, and you come up with a net position, add it to the beginning year's change in net position, that is, add it to the beginning of the year net position to come up with final net position for the year, and this tie out to the government-wide statement of net position. Now we're going to talk about the fund basis statements. And what I'm going to do here is I'm going to give you your next discussion question. And the next discussion question is, which set of financial statements are more informative and why? So what I mean by set of financial statements, I mean, are the government-wide financial statements more informative, or are the fund basis statements that are about to talk more informative? There is no right answer. I'm asking you to make your case for which is more important or more informative. I'll give you a bit of a hint that the government-wide statements tend to have more of a long-term focus, and the fund-basis statements, depending upon whether they're governmental funds or proprietary funds, have a bit of a shorter-term focus. Both have value. I'm looking for you to describe, in your estimation, which is more useful to a financial statement reader. So these are the fund statements. This is distinctive for governmental GAAP. We have governmental funds that are a balance sheet and statement of revenues, expenses, and changes, and a required supplementary budgetary comparison, which actually can be in a couple of places in the report. And but typically in governmental funds, there are two main statements: the balance sheet and that statement of revenues, expenses, and changes in fund balance. Then for proprietary funds, you have three core statements, and this is what should look relatively familiar to you. The statement of net position, which is like a balance sheet, the statement of revenues, expenses, and changes, and notice expenses versus expenditures in governmental funds. Expenses and changes in fund net position, and then you have a statement of cash flows, which is something you're familiar with. Those are the three statements for proprietary funds. And then you have fiduciary funds, only two statements: the statement of net position and the statement of changes in net position. Now, before we dive too deeply into these statements, we need a few words about major funds. We talked about this last time. I'm not going to be able to go into enormous detail just because of the constraint of time. However, the governmental funds are prepared with a consideration for which funds are major. So the general fund is always major, always major. That even might be a CPA exam question, typically. And the other funds, if they are major, must be presented. And there's a test which is summarized here, and you can look at the book for more details. Those are also shown as major after you determine whether they are. And the rest of the funds are rolled together in a total non-major funds column. Now, as I talked about last time, you can break some of those out if you wish, but it is not required. We're trying to make the financial reporting less cumbersome, less confusing. So that's why we use the major, non-major concept. And you have a total column as well. This is what a balance sheet looks like. This is from Statement 33 in Copley. This is a balance sheet. So its basic format is assets equal liabilities plus equity, that is fund balance. You will see here that we've got the general fund and a couple of other funds that appear to have passed the test to be major funds. Then I think in the text what they talk about is the debt service fund being a management decision to be a non-major fund. I'll say that the author of the textbook could have, and maybe should have, had some sort of label over this debt service fund saying non-major fund, so you knew it was a non-major fund. Or maybe if they want to designate it as major, they could. The point here is that if you have non-major funds, they would be in one column at the very end here in an aggregated presentation. I'll also mention that we have here is something called a deferred inflow of resources. This goes on, we could have a deferred outflow, but in this case we have a deferred inflow, which is basically property taxes, in this case that relate to funding of a future period. So those are broken out on the liabilities side of the balance sheet, but they're not really liabilities in the conceptual sense that GASB has established. But really, if you had a full governmental balance sheet with all the elements, you'd have assets plus deferred outflows of resources, and you'd compare that with liabilities and deferred inflow of resources plus fund balance to have hopefully a balanced equation. Now, there are various classifications of fund balance, which will be a topic for another class. Now, the flows statement for the governmental fund, that is the statement of revenues and expenditures and changes in fund balance. This is the basic format for that report. You have revenues, less expenditures, not expenses. Expenditures tell you that you are using the modified accrual basis of accounting, plus or minus financing sources or uses, and those are basically transfers between funds. And also on the sources side, there could be bond proceeds. And then you have special items, and the special items are items that are unusual or infrequent and within the control of management. These are, I would say, lumpy items, particularly when we talk about bond proceeds and these special items that we try to pull out of revenues and expenses because they're not really a true reflection of the basic underlying financial activity. In the case of transfers, when you're moving money between funds, if you were to count those as revenues and expenses, there'd be some double counting going on. So we'd like to pull those out. That all results in a change in fund balance for the fiscal period. Adding it to the beginning fund balance gives you the ending fund balance for the end of the fiscal period. So that report, some of the parameters around it. Expenditures are classified by character, and character relates to the time related to those outlays. So you have current outlays that are shown by function, which might be general government, could be public safety. You have some discretion on how you classify those current expenditures. You have also debt service, and you have capital outlay. Debt service we'll talk about in another class in detail. So really what you've got are these current and then I will say less current items, but it's really not a classified balance sheet or statement in the sense that you're used to in the with commercial accounting. Here's what one of those statements looks like. This is from chapter 35 in Copley. We have again those same funds. We're looking at debt service as being either non-major or a non-major that's been judgmentally designated as major. Revenues minus expenditures, and you've got these current expenditures by character, and you've got some other items here, capital outlay and debt service, giving you a surplus or deficiency, as it were. And then you have these other financing sources that here's those transfers. They've got some issuance of debt, which we talked about. So this takes out some of the double counting and some of the lumpiness. Now here you see this issuance of debt, $9.7 million. That would really throw off the revenue number if you threw it up into revenues. And you have the excess or deficiency of revenues over expenditures. Again, adding prior year fund balance, coming up to your resulting ending fund balance. I will just briefly say that these statements, and I alluded to this earlier, the net position statement needs to roll up into the, after conversions, roll up to the government-wide level in governmental activities. You add internal service funds to it, and the GASB asks you to put a schedule in to show how you got there. So I'm not going to spend a huge amount of this now, but you can see that just from the first item, capital assets used in governmental operations that are not financial resources and therefore not reported in the funds. We don't report capital assets in governmental funds. Instead, when you buy a capital asset, it's an expenditure. So that's a difference that is shown in this reconciliation schedule, but it should tie out to the government-wide statement of activities. Excuse me, government-wide statement of net position. This is an example of the reconciliation to the balance sheet. There's also a similar reconciliation from the government-wide flow, the governmental funds flow statement up to the government-wide statement of activities. So there are two reconciliations that are required, one for the balance sheet side, I'll say, and one for the flows side. Okay, proprietary funds. We still have the same idea of major funds or not, non-major funds, showing a total for enterprise fund and a separate column for those internal service funds. And that is because those are going to roll up governmental activities, not business type activities at the government-wide level. Here we do classify assets and liabilities formally as current and non-current, which is more what you're used to seeing on the business side. We have net position in those same three categories that we talked about earlier: capital assets, net of related debt, restricted and unrestricted. And here you don't need those reconciliations because both the accrual basis of accounting and the economic resources measurement focus. This is what a position statement looks like for proprietary funds. We've got a water fund and a solid waste fund, which look to be major. We have a parking fund that has been designated as major, or perhaps this column, if it were not major, if we went through the tests, should be labeled as non-major. A total, and we have look at this, governmental activities. Those roll up. Those are the internal service funds, roll up to governmental activities at the government-wide level. So they're broken out from the rest of the enterprise funds. We've got that classified balance sheet going on, current and non-current items being shown. Here, be careful. This is not indented correctly. I would pull this out here if I were doing the printing for non-current assets, so you can see that a little bit better. But you do have a classified balance sheet. Okay, now a little bit about the flow statement. Again, very similar to a commercial income statement. They do have certain non-operating items, interest expense, or certain gains and losses. This is what that flow statement looks like. This is from page 39 in Copley. Shouldn't be too many surprises here. You've got this classification. You got operating items and you've got non-operating items. You've got below the line, so to speak. You've got these transfers because they would obscure the measurement of operating income, and you'd be double counting between funds if you rolled them in even non-operating revenues. And you've got some capital contributions, which are also allowable below the line. They're large items. And you've got a calculation of change in net position added to net position beginning of the year to end with position for the end of the year. There's no reconciliation, again, required for these statements because they're the same measurement focus and basis of accounting as the government-wide level. Now, we're going to talk briefly about proprietary fund statements. They are, excuse me, let me stop and talk just briefly about the cash flow statement. We do have a cash flow statement of the proprietary funds. There is an aspect of this is a little bit different than what you're used to seeing in business statements. That is, they have 4 classifications instead of 3 like in the private sector. We have operating, non-capital operations related to financing, capital that is fixed asset related financing, and then investing. So we give a little more detail in the government side than they do on the private side. And I will say that operating activities use the direct method for their presentation, the direct method. This is what the statement looks like. It's page 41 from Copley. You can see the 4 classifications here. Same breakouts in terms of governmental activities and business type activities. Here we have an additional piece. Remember, we're using the direct method in the body of the statement itself, so the GASB requires a reconciliation here of operating income to net cash provided by operating activities. So this would come after the statement that I just showed you. Could be at the bottom of the statement if it fits. Bottom of the cash flow statement. Now we'll get into fiduciary funds just briefly. Here, fiduciary funds use the equation net assets minus liabilities equals net position, just like we do at the government-wide level. With one exception, there are agency funds that don't have any sorts of flows. Their assets just equal liabilities. Now, again, these fiduciary funds do not roll up into the government-wide level. They're only shown at the fund level. There is a statement of changes in fiduciary net position, except for that agency fund that tries to explain those changes in fund resources. Again, these fiduciary funds essentially are assets being held for the benefit of others, generally speaking. And the events are measured using the economic resources measurement focus and accrual base of accounting, just like a proprietary fund. And we don't call the changes in the difference between additions and deductions. Those are the flows in this statement, additions and deductions. They're not called income, they're called change in net position. Now, there are notes to the financial statements, very important. They are integral to the financial statements. They are considered an essential part of the statements. You can't really understand the financial statements themselves, the numbers fully, without the notes. The first note is the summary of significant accounting principles. If you look on page 44 and 45 in Copley, it outlines all of the different note requirements. But when you look at page, I think it's 44, you'll see there's a lot of detail that goes into the summary of significant accounting principles because of summary of significant accounting policies. Due to limits on time, I cannot go through it in detail, but please do look at pages 44 and 45 to understand the content of the notes. Then we have required supplementary information. That includes the MD&A, which we talked about previously. It also includes that budgetary comparison schedule that pertains to the governmental funds and special revenue funds that have an approved budget. There's infrastructure. There's information about infrastructure if the modified approach is used. We'll go into that later, but not many governments use the modified approach. If a government does not use the modified approach, no required supplementary information is required about it for that government. Information about defined pension benefit plans, that is required. Anything having to do with external risk pools that may or may not apply. If an RSI item does not apply, you don't close it. You don't have a blank page with a title on it. You just leave it out entirely. But this is required. RSI is required. So it's not something you can opt out of if you're going to issue a GAAP basis report. Now, the budgetary comparison schedule, this is a very interesting schedule. It kind of reflects the accountability aspect of governmental financial reporting. As I mentioned earlier, it's required for the general fund and each major special revenue fund with a legally adopted budget. What it must show is the original budget, final budget, and the actual budget on a budgetary basis. So this may not be the same as actually the numbers that are shown in the fund basis governmental fund statement of flows. So a lot of governments will try to make it the same so that they aren't showing different numbers on a budgetary basis versus the fund basis governmental funds. It just makes life easier. But if you do have differences, you need to show a reconciliation from these funds to the fund statements. So there's kind of an incentive there, I've always found, to keep these numbers on the same basis. Well, how could they be different? An example of how it could be different would be as follows. As we'll look later, governments, when they order goods, a lot of times issue what's called order goods. They issue what's called a purchase order, which triggers an encumbrance. That's like a temporary expenditure in the general ledger. Some governments will count those encumbrances as actual GAAP expenditures, or not GAAP, but actual expenditures for a budgetary basis, so that you can't count those for a GAAP basis. That creates a difference. So what they're trying to do is get the numbers for a budget in the year for which they were intended, regardless of whether or not they qualify as real expenditures. So if they do that, now you've got a difference because you can't count those outflows as GAAP basis expenditures. So there is a reconciliation required. But this comparison to budget is really an artifact of governmental accounting and financial reporting, that it focuses on control, that is making sure that we haven't exceeded our spending authority. So this is what the report looks like. The schedule of revenues, expenditures, and changes in fund balance, budget and actual for the general fund. There would be others for special revenue funds that are major, that have budgets. So here we got revenues, expenditures. We call it expenditures because they're certainly not accrual type expenses, and a difference in certain transfers are accounted for here. And you have a original budget, final budget, actual, and this variance column. This variance column is optional. In this case, the government decided to show that variance column. Just a word about combining in individual fund statements. Now, the minimum GAAP requirements do not call for combining statements. Remember those non-major funds that we talked about that are aggregated or could aggregated together for the fund basis statements? Well, if you want to see the detail, you need a combining statement. So a combining statement would show all those non-major funds and then would create a total that rolled up into the fund basis statements that are required by GAAP. And this is only required for a CAFR. I guess you probably can see why, because it's more informative, but if we're trying to streamline the financial statements at the fund level, really not absolutely essential. That concludes our second part of Chapter 2. Thank you for your attention, and please do remember to go to Blackboard and respond to the two discussion questions that were presented, one in Part 1 of Chapter 2 and one in Part 2. Thank you.